Today, Bitcoin tumbles to $19,000. Grayscale sues the SEC for rejecting its spot Bitcoin ETF. And after a rough first half of 2022, Anthony Georgiades shares his crypto outlook for the rest of the year. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Prices are deep in the red this morning. By noon Eastern, Bitcoin fell to $19,000, Ethereum dropped to $1,000, and Binance Coin fell to $211. Now, today's losses leave Bitcoin down 40% for the month of June and down 58% for the year so far. Okay, on to our top stories. First, a new report claims that FTX considered buying Celsius until it looked at its finances. The block reported that FTX almost made a deal with the crypto lending firm, but backed out after seeing that it had a $2 billion hole on its balance sheet. Now, the block also says that Celsius is resisting calls from its lawyers to file for Chapter 11 bankruptcy, and instead it's working with Citigroup and a restructuring firm in an effort to stabilize its business. Next, the SEC just rejected Grayscale's proposed Bitcoin spot ETF, and the company is now suing the agency. The SEC rejected the proposed ETF, saying that Grayscale hadn't answered questions on how to prevent market manipulation. In return, the world's largest Bitcoin fund filed a petition with the U.S. Court of Appeals. Now, crypto bulls have pinned their hopes on a spot ETF, leading to more institutional adoption of crypto, but so far, the SEC has rejected every spot Bitcoin ETF put before it. Finally, researchers say that North Korea was likely behind that $100 million hack of Horizon. Blockchain analysis firm Elliptic says hacking collective Lazarus Group, which has strong ties to North Korea, is likely behind that breach that stole $100 million from the Horizon Bridge. More and more, North Korea has been linked to multi-million-dollar cyber attacks as a means of skirting sanctions. Just this year, the U.S. Treasury Department attributed the $600 million hack of Axie Infinity to Lazarus. For our main story of the day, I spoke to Anthony Georgiades, co-founder of Pastel Network, about the recent declines in crypto prices, what he expects for the next 6 months, and I got his reaction to the SEC's rejection of yet another spot Bitcoin ETF.
So crypto markets had been fairly stable in the last few days. And then today we saw another sell-off across the market. Is this a buying opportunity for crypto investors, or is this the start of a longer, more protracted period of depressed prices?
Definitely. I think anybody that's looking to enter the market at this point in time needs to have a little bit more of a macro and longer term outlook in terms of really what's going on right now. To be clear, this last crypto cycle that we've seen has been a massive byproduct of a global debt-based, non-free risk asset market, right? Money's been historically cheap, making it very easy to take on highly speculative bets in crypto itself. Low interest rates, high floats have driven a really risk-on sentiment and search for high yield in a cycle that we're really seeing unwind in a 180-degree direction for the first time really since 2009. The nuance in the current crypto backdrop as well that makes the current price activity so unpredictable is that beyond the fact of this monetary policy shift, we're seeing a crypto market that's become tightly intertwined with the likes of decentralized finance, on-chain lending activity, think liquidity mining, yield farming, and various off-chain centralized custody providers. It's been easier than ever to take on risky leverage, and there's very complex staking and high-yield strategies dispersed across thousands of pools, thousands of wallets, thousands of providers really, that it's much more difficult to really understand the full impact of the broader unwind and contagion effect itself.
We've seen a lot of turmoil in the crypto markets in the last 2 months. This week, Three Arrows Capital having a loan default, the Celsius solvency crunch before that, and then in May, the implosion of the UST stablecoin project. Has this permanently rocked confidence in the sector, or was it a necessary washout?
Right. It's certainly a combination of both factors. I think the biggest surprise is that a lot of the so-called smart money players out there have been able to take on these insane levels of risk and leverage without being properly hedged on the other side. It's as if during this period of insane money printing, massive inflows of exogenous capital, basically high speculation on crypto assets, a lot of these big players lost a lot of sense in terms of the longer term discipline and overall risk management. The scary contagion risk from some of these players as well is the fact that as the market continued to rally, a lot of their core holdings enable them to take on more and more nominal leverage with healthy credit as their core collateral bases continue to appreciate in price. What's more is they were able to use a lot of their prominent reputation to take on even riskier under collateralized loans or posting illiquid assets as collateral as well. So as the market's been churning south overnight, credit conditions have quickly turned poor, leading to a wave of margin calls, liquidations on posted collateral. Instead of being in a position to better manage risk and delever, some of these players even found themselves going further long, trying to turn their P&Ls black overnight. So I think the bigger thing is there is a broader washout that I think is very important, so we can get back to the basics of long-term discipline, risk management.
So we saw the SEC reject Grayscale's application for a spot Bitcoin ETF yesterday, citing concerns over market manipulation. But ultimately, is the approval of such an ETF what the market needs to provide some relief?
An ETF that's driven by spot versus futures would definitely be very positive to the market overall. You saw obviously with Grayscale, and I think they're actively trying to refute the rejection at the moment in time with the SEC itself. I do think would provide a wave of continued confidence and conviction. While I do want to note that there is obviously still manipulation and whatnot in some of the price activity in the market globally itself, assets like Bitcoin are very much so sufficiently decentralized at their core overall.
We're closing out the first half of 2022 today. We've got Bitcoin down more than 55%, Ethereum down more than 70%. What's your outlook for the rest of the year?
Absolutely. The short answer is the crypto market's not going anywhere over the long term, right? What's important to understand is that if you look at what's happening now, it's very, very different than back in the 2017, 2018 crypto crash, which I think was a lot more akin to the dot-com bubble than what we're seeing now, which is the impacts of monetary policy driven contraction, as well as some of the broader complexities that have basically pent up in the market itself. Back then you had countless projects raising hundreds of millions of dollars with nothing but a white paper or sleek roadmap. Today, you've seen much stronger, dramatic validation and adoption across thousands of use cases, from enterprise applications that are being developed at Fortune 100s like JP Morgan to acquisition directly by sovereign states. Think Turkey, El Salvador, etc. Flash forward to today, we're developing tremendous amounts of innovative technology. We're finding product market fit across various aspects of the international Web3 landscape, and we're working on infrastructure to onboard the next billion users. I think there was a lot of crypto businesses that raised a lot of money in terms of looking to build out products and have really probably overhired and overspent on sales and marketing drastically without necessarily building the core long-term research, development, engineering, or differentiated product offerings that would sustain their actual use case into the future. So I do think we'll see a washout from some of the core crypto businesses that are far from finding product market fit and have yet to really execute on some of the key aspects of their broader timeline and milestones. On the flip side, I do think that it is likely that we will see continued insolvency in some of the centralized providers in the space. I wouldn't necessarily be surprised if we saw large-scale, top-tier centralized exchanges who run into insolvency concerns over the coming months as some of this complex unwind starts to really unfold.
Okay, one last thing before we go. We want to let you know about some breaking news. FTX is nearing a deal to buy crypto lending platform BlockFi for $25 million, 99% below the company's last private valuation. The news comes after the crypto exchange provided a $250 million emergency loan to BlockFi in the wake of the crypto downturn. For more on this, head on over to cnbc.com/cryptoworld. We'll be back again tomorrow, and we'll see you then.